The graphics of candlestick analysis help investors see exactly what's happening in investor sentiment. For example, the last couple of days or 3 days of trading in the Dow have been very strong price moves to the upside. There's a very simple rule in candlestick analysis based upon what the Japanese rice traders have illustrated for us over the last 300 or 400 years. Where do most people buy? They buy exuberantly at the top. That exuberance usually occurs when your stochastics are in the overbought area and you start seeing big price moves. That's when everything looks so rosy that nothing can go wrong. But the graphics of candlesticks allow the candlestick investor to be a little bit more prepared for this is the areas where profit taking is likely to occur. That same exuberance is being witnessed over in the transportation index. Huge moves for the transportation index over the last 3 trading days. This just says be careful. We're in the overbought area and everybody's buying with great enthusiasm. Knowing what each candlestick signal illustrates, either on the bullish side or the bearish side, allows investors to take the maximum or the majority profitability out of a trading trend. For example, on our recommendation on DXCM, when we had the best friend signal, gap up, strong price move. When was it time to take profits? Well, the warnings started coming when you started seeing lots of buying and starting to move away from the T-line. When it was trading up here, note the distance between there and the T-line. That's when you flip to your 10-minute chart and look to see when it's starting to take profits. The ultimate was you shouldn't see it trade back below this level, the open of that candle. So if you took some profits here, you took some profits here, that gave you an average profit somewhere up in this range. Just the fact that we're seeing a bearish Harami hanging man signal that was occurring when prices started to move away from the T-line just told you the probabilities from human nature was that this is where the profit taking was starting. The analysis also for when a trend is reversing can be illustrated when we were trading NVIDIA in this uptrend for quite a few months, based upon the fact that every time it got near the T-line, it came back up again. When it came down through the T-line, it was very indecisive. But up here, notice what happened. We topped out at the same level as it topped out before with another candlestick sell signal, a bearish engulfing signal, and a close below the T-line the next day. That combination, especially with the candlestick sell signal at a double topped, told us that was a good place to start taking profits and that something had changed in this excessive strong uptrend. How long do you hold a long position? Our recommendation on ADMS has been on the basis that we took profits here, but then notice the little scoop type pattern. We were buying back, and how long do you hold on to this position? Until you see a sell signal and a close back below the T-line. Candlestick analysis is merely the graphic depiction of what's happening in human nature, and the signals and patterns that it creates are based upon human nature working the same way time after time. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Candlestick analysis is merely the graphic depiction of what's going on in investor sentiment. That'll be it. We'll see you in the chat rooms.